Okay, we are live. Welcome, everybody. It is September 12th, Thursday. It is 2 o'clock Eastern. I'm joined here again with Morgan Holmes as we continue our Stride Tax series, MSPs. Morgan, how are you doing today?
Great. Thank you, Casey.
So, glad to have you here today. We're talking about how MSPs leverage tax benefits through depreciation in Section 179. So, Morgan, first and foremost, how about a high level overview of Section 179, depreciation, and how it pertains to MSPs?
Sure. Both depreciation. So Section 179 is depreciation. And when we talk about depreciation, we also need to talk about bonus depreciation and then just regular depreciation as well as Section 179. But in particular, today, what we're going to talk about is bonus depreciation and Section 179. Both of them referred to as accelerated depreciation, right? So both of them allow you to write off a significant amount of your asset purchases up front. Both bonus depreciation and Section 179 are really meant to encourage capital investment in businesses, particularly small businesses, because there's certain limitations on the amount that you can put into service for Section 179. Both bonus depreciation and Section 179 depreciation are ways that businesses can maximize cash flow by reducing your tax liability. And there's certain limitations on the type of assets you can use bonus depreciation for, as well as 179. But for the most part, MSP clients should be able to take advantage of bonus depreciation and Section 179 tax benefits, pretty heavily.
Got it. So obviously a main benefit, as you said, encouraging capital investment. What type of investments would count within that section? Are we talking infrastructure, technology, equipment? What does that look like?
Yeah, all of that. So for the most part, if you're purchasing furniture, equipment, computer equipment, even to some degree, leasehold improvement property potentially could be eligible for bonus depreciation. But for the most part, you're really talking about assets with a tax life of 20 years or less. So, servers, computers, software, all of that stuff.
Got it. Tools they use in their operations. I'm sure there's a lot of opportunities there as MSPs have pretty complicated infrastructure. And obviously, the tax benefit, maximizing cash flow, reducing that tax liability, taking advantage of depreciation just so you can use that investment dollars elsewhere instead of sending it to the government. Um, let's talk a little bit about some of the limitations or what are any other benefits around Section 179, bonus depreciation, and such.
Sure. I guess we can talk about Section 179 first. So Section 179 has an annual limitation to the amount of Section 179 depreciation you could take. For 2024, that maximum amount of depreciation that you can take is $1,220,000. There's also a limit on the amount of assets that you can capitalize and take the 179 depreciation on. Again, for 2024, that amounts $3,050,000. And then your 179 starts getting phased out for dollars after that. So bonus depreciation, there is no limit on the amount of depreciation that you can take. So if you place into service $10 million of equipment, you can take bonus depreciation on all $10 million, assuming it's qualified property. But it is for 2024, bonus depreciation is 60% of the assets placed in service. So if you place a $10 million asset into service in 2024, you would get $6 million of bonus depreciation.
Got it. And when you say bonus, does that include the amount or just the 6 million of the original $10 million asset? What does that look like in terms of the math on that?
Yeah, so the way it would work is if you were to place a computer, if you acquired $10 million of computer equipment, the $6 million bonus depreciation you would take up front, the remaining basis of $4 million, you would take regular depreciation on that. So,
Got it.
which would be, another 20% of that $4 million. So you would end up with $6.8 million of depreciation in the first year.
That's incredible. So I want to talk and make sure we discuss some of the specific benefits to 179 now that since we've talked about both, like what MSPs or what level of organizations would pick 179 versus bonus depreciation. Talk a little bit about some of the, let's say, the shorter term benefits of that.
Yeah, so section 179 is you have to elect into section 179. And so when you elect in, you can take specific depreciation amounts on specific assets. So that's one nice thing is, when you're electing in, you can say, hey, I want my taxable income to be $100,000, and you can elect the amount of section 179 depreciation that you're going to take to get you down to that
Got it.
$100,000 amount. So that's a significant benefit of 179 is you can manage your taxable income. You cannot do that with bonus depreciation. So bonus depreciation, you can elect out of bonus depreciation. So you are required to take it unless you elect out. And it's based off of the different classes of assets. So if you don't elect out of taking bonus on computer equipment, you're going to be generating a significant amount of bonus depreciation, which won't allow you to manage that taxable income as effectively as 179 might.
Got it. So if you're an MSP that wants a specific taxable amount of or tax liability, taxable income, section 179 becomes a benefit. And then it also allows you to have an immediate deduction for equipment costs, right? So if you're looking to make a short term or a quicker investment, it might be the opportunity for an MSP to utilize that, especially if they have planned purchases coming up in a specific tax year.
Right. That's right. So both of them do that. So it increases your return on your investment, right? So if you purchase $1 million asset and your federal and state combined tax rate is 40%, for example, your total effective cost is 60%.
Got it. That makes sense. Now, is there a limitation of the types of assets that can be applied to each? Is there any difference between either election for what you can depreciate, or is it pretty standard across the board?
Yeah, so it's fairly standard across the board. It's going for MSPs, it's going to apply to computer equipment, furniture, and items like that. Bonus depreciation will also allow you to take some bonus depreciation on qualified improvement property. So yeah, so I mean it's they're both fairly similar. It's just how you want to use the depreciation methodologies. But my guess is that most MSPs are probably going to want to use bonus or section 179 over bonus.
Yeah, I think one of the important consideration is making sure that the equipment or software or tools are placed into service during the tax year that you're using that benefit. Often we see companies switching from, let's say, to ConnectWise to Halo or AutoTask to ConnectWise, and they make that purchase the year prior, but they don't actually place it into service till a January 1, even though the purchase was completed in December of the prior year. So I think that's a big definitive, hey, make sure you have the right tax planning so you can take that benefit, because I think we see that pretty frequently since those big software conversions internally for MSPs typically happen quarter 4 and the beginning of quarter 1 for some sort of turnover or cutover. So
yeah, and typically you'll see more fixed asset purchases, for like automobiles, for example. Both automobiles for bonus and for section 179, you could take on an automobile. We won't get into specifics on the automobile limits and all that in this discussion, but you can take bonus depreciation and 179 on automobiles. So what you'll see is people looking at, hey, I need to drive down my taxable income this year, and they'll start looking at asset acquisitions in their current year, right at the end of the year. And again, to your point, as long as that asset is placed into service before the end of the year, you would be able to take depreciation on that.
absolutely got it. So when we talk about bonus depreciation, what are some of the differentiating factors or benefits for why you wouldn't elect as an MSP owner to go with section 179?
So bonus depreciation doesn't have the capitalization limit. So again, section 179 has that $3,050,000 capitalization threshold. Bonus depreciation does not. So if you're placing the service a significant amount of assets, bonus depreciation is probably the way to go. And actually what you might want to do is kind of couple those, right? So first take your section 179 and then take bonus on whatever's left so that
Got
you
it.
can maximize your benefit. So yeah,
So this is
that's
an
the biggest
opportunity.
difference.
So there is an opportunity where an MSP, they could use both styles of depreciation to their benefit. It's not a this or that, it's a this and that.
Yep, that's right.
Got it.
Yep.
I
And
think it's
then
a very good
obviously the
benefit.
last piece of that is if you have any remaining basis left over, because again, you can only take 60% for bonus depreciation. That
Got it.
remaining 40% again is still eligible for regular depreciation.
Appreciation. Got it. And that's why I think it's so critical to have the right tax professional and somebody who's familiar with these opportunities, because these calculations, there's a lot of room for error. It's relatively simple in its nature and the terms and what's allowed and what's not allowed, but it's just making sure you have the right numbers. So you're making sure you're taking these depreciation or these deductions with some sort of level of confidence where, yes, I have the paper trail, I have the documentation, but then I've also calculated this figure correctly with my tax partner. And if your tax provider is not doing that, you should definitely have a discussion with them about how you could take advantage of these opportunities.
Agreed.
So, any examples, or is there anything you want to give just if, in case anybody has more of a visual style or wants to be able to hear it in a different way? For instance, an MSP purchases $500,000 worth of equipment in 179, they can deduct that entire amount, correct?
Yes.
Got it. So simply put, and then the calculations happen once you get to bonus depreciation based on the guidelines of up to 60% in the first year, and then able to take the remaining over the prior or the following years.
Right. Bonus depreciation too, after 2017 can also be taken on used assets. So if you go and acquire another MSP, and as part of that acquisition, you're acquiring a good chunk of fixed assets, you can apply bonus depreciation to those acquired fixed assets as well. So again, increasing your return on investment on that acquisition, assuming you do an
Got
asset
it.
acquisition.
I think that's a very important point for the MSPs. You see it a lot in the space. The million and a half, they purchase another smaller 3, 4, $500,000 shop so they can improve their assets, improve their customer base, and so on. And I think that's probably a very unused opportunity for many of the MSPs as a deduction, thinking that, oh, the company I'm acquiring also has assets that can be depreciated. So that is a very good point right there. Morgan, traditionally we say too long, didn't watch. What's the 60-second, 30-second bit of value that people should know about depreciation and these opportunities through section 179?
Yeah, so I think the long and the short of it is that depreciation again is part of the cash flow puzzle, right? So
Yeah.
we're trying to increase cash flow. If you're out purchasing fixed assets, computer equipment, infrastructure, vehicles, anything like that, you should be looking to try and maximize your depreciation on that, either via bonus depreciation or section 179. And how you do that, probably you should work through with your CPA or other tax provider to maximize the amount of depreciation you can take.
Yeah. So leverage depreciation through 179, you can do 179 and bonus depreciation. It's going to improve cash flow, it's going to reduce tax liability, and it's giving you more confidence that you're maximizing your tax liability situation for your MSP. Morgan, thank you again. I appreciate you as always jumping on, especially with the September 15th deadline right around the corner. So I'll let you get back to the tax returns, and thank you again.
All right. Thank you, Casey. Bye, everyone.
Have a good one. 1335. Oh, good.